Hi, I'm here today with Neil Roseman. Neil is a guy who knows his way around the Baltimore investor game from numerous perspectives. And we're here to talk today a little bit about hard money and his company, Block M Investments. So Neil, look, as I said, you're a guy who knows your way around the investment game in Baltimore. Give us just a tiny bit of background on your involvement.
Okay, great. Well, so Bob, I own three businesses. I've had lead probe where we do, lead paint inspections for homeowners and primarily investors. We've done over, 80,000 lead paint inspections, a majority of them in
Wow.
Baltimore City. Yep. Been doing that for 16 years.
So you must be doing them right if you're doing 80,000 and you're still in business and haven't had your license taken away.
Yes, that is a challenge every day with the Maryland Department of the Environment. So yep. And then I also own Lodestar Inspection Services, which is a full-blown home inspection company where we do home inspections for real estate purchases, and we also do all the Baltimore City, Baltimore County rental inspections, and we do probably 50, 60 inspections a week in Lodestar. So we're just very tight with the real estate investor community. And obviously I own Block M Investments, which is a hard money lending company. So my three businesses service the real estate industry, and my job is to take care of my clients that way.
Well, the thing I find most interesting about you is that, as I said, you've got this unique perspective on investing in real estate, from the hard money perspective, from the lead perspective, from owning your own rental properties and different types of things. And that's something that sometimes people don't have that perspective from multiple angles.
Yep.
So for the people that don't know, we hear these terms a lot: hard money, private lender, that type of thing. Which one do you consider yourself, a hard money lender or a private lender? And what's the difference, do you think?
Yeah, well, let me start with the difference. So most people would consider a private lender as maybe a friend, a family member, a doctor, an attorney that, somebody has extra money and just wants to invest it. Okay. Private lenders are going to be, as a rule of thumb, a little cheaper, maybe easier on the terms. They maybe don't know what they're doing, which is maybe a good thing for you as an investor. They're not going to have the controls in place that maybe a hard money lender would. A hard money lender is going to be somebody who does it for a business, as a business. So it's my job to take care of my customers. If a customer comes to me and I can't fund the loan because I don't have enough cash, I'm gonna have to go out and get some cash. I want to keep that customer as a customer. So I run it as a business where I make sure that I can meet all the demands of my customers. And I'm going to be more expensive. I've gotten burned a few times in the past, as I'm sure you can imagine. So I've learned my lessons. I have systems in place. So it's going to be a little bit more rigid than maybe a private lender would be, but you'll get a lot more access to a lot more capital that way.
Right. So I remember quite a few years ago, there was not a whole lot of hard money lenders, private lenders out there. There was maybe a handful of people that did this thing seriously. And of course, you'd have to know them or have some type of relationship. From your perspective, what are the challenges that a lot of investors have these days with hard money and getting financing?
Well, I think there's two or three obstacles for them. And we're kind of morphing into three types of hard money lenders. You've got the national lenders with hundreds of millions, if not billions of dollars across the country. And then you also have smaller local players, but bigger players that maybe have 50, 60, 70, 80 million that lend. Then you've got smaller people like myself who are local lenders who have less than that. And it's all,
You didn't give us a number. That's okay.
Okay. Yeah. I mean, I lend in that 10 to 15 million range.
Okay.
Okay. So I have about 170 loans out there right now.
Okay. Well, that's impressive.
Yeah. There's many people like me like that are out there, and we're mostly relationship based. So yes, I have a website, but I don't drive my website. I mean, it's all about relationships, referrals, handshakes, like that. So if you're going to use one of the big lenders, so the national lenders are really good for large projects, okay, or multi-state projects or things like that. But you might run into some problems with them understanding Baltimore City real estate. Some of those lenders won't even lend on a ground rent situation.
Right. Yeah. How stupid is that?
Exactly. It is like they can't even wrap their heads around it.
Right.
It's just a flat out no. Or you might ask for a draw, and it has to go, and an inspector has to go out, come out, and then issue a report, and then it goes to a CFO who has to approve it, and you get your money 10 days later. While a local lender like myself will usually come out the next day, write you a check on the spot, wire the money the same day, that kind of thing. So you'll get a better customer service with the smaller, more local people. The national lenders could be a little bit cheaper, but there's committees involved. It's a longer time frame.
Right. Like you could probably call up a national lender and find like some $2,000 lot in Baltimore City and just tell them like you want to borrow 90,000 on it, and they would be like, okay, well, let's take your application and let's look into it and all this kind of stuff, without realizing right from the beginning that it's just not a deal. So I think you
Right.
kind of like offer that local perspective that these national guys just can't, because they just don't know the market. Where a
Right.
guy
So
like you could jump on the Google Street View, or just from your knowledge of an area, say, that's not something that I could finance. And you're saving people their time from barking up the wrong tree, especially when these lenders want to charge a fee just to analyze your deal.
Yeah, you're 100% perfect. That person's going to call me. I'm going to tell them right over the phone, I'm not going to do that deal. And at least they'll know. Well, the national lender might, I'm not going to say string them along on purpose, but they're going to go through their process and let them know 3 weeks later they're not going to fund the deal. Right. So, and then the other, to go back to your previous question is loan size. So people come to me because my minimum loan size is 16 grand.
Gotcha.
And
Okay.
most national and larger lender, even the local larger ones, that will be in that 75 to 125 range as a minimum, which will by definition eliminate a large swath of Baltimore City.
Why do you think that is? Why do they have these loan amount minimums?
Because they're set up like banks, so they just make money on the margin. They're borrowing money at X and lending at X plus 3, so it's just not worth a 3% spread on a $25,000 loan. They have to pay all these people for when it's not your money, your personal money. It's not worth it. There's not enough money there. When it is your own money, then it is worth it. I don't mind making. I love making those loans. That's why I have 170 loans, and and not that much money on the street. Because my average loan size is like 75,000 average, while most of the other guys are averaging 150, 175, something like that.
Well, it seems to me that there's like a lot of opportunities if you're, I guess, an investor that's willing to work and, do your homework, to go into some of these lower end, lower price neighborhoods and be able to buy a property, a shell, or, property that needs work, borrow your hard money, fix it up, and then obviously rent it, refinance it, or whatever it is, and pay you off. So hard money lenders have typically had the rap that, their interest rates are high. But I guess if you're looking at it from the standpoint of, if that's the financing you need to make the deal, I mean, what does it cost you if you don't do a deal that you were going to make profit on?
Correct.
So I guess, what are the different types of loans that Block M offers? And I guess we're talking about the standard. You got a rental loan, you've got a standard loan that people are going to use for house flips. So what's the difference? How do they work?
Yeah, so the flip loan is the basic loan that most other hard money lenders also do, where it's 65 to 70% of the after repair value. So you take the after repair value of what you're going to sell it for once it's rehabbed, and take 65 to 70% of that. That's what I'm going to lend you. Take that number, subtract off the rehab budget, and that's what I would then lend you, whatever's left, as the purchase price. Okay, that's a 12-month loan, 13.9%, 3.9 points, no prepayment penalty, no junk fees, not my claim to fame. And you get the service. Like a gentleman called me this morning, and I said, okay, I can be out there at 1 o'clock today. So he'll have a commitment letter tonight.
Yeah, and a lot of times people, I guess, maybe they use hard money lenders as kind of like a backup plan or something like that, because they go into something, they contract for a $25,000 property, you take it to your local bank, and all of a sudden they're like, well, where's the property at? Oh, geez, I got to talk to Ted. Ted, do we loan in that area? That type of thing. So I guess it's always good to have hard money as a backup, because it's not something that you have to hang on to forever and pay interest over 30 years. So if it's a tool that gets you into a property and is able to, get the house fixed up, turn it over, resell and make a profit, that's great. And obviously if it gets you into a property as far as a potential rental, to get it up and running, get the tenant in there, because we know that, dealing with Baltimore City and, the permits and, contractors can be, it can be quite a job. So if that financing can get you into that and get the property up and running, get it rented, now you can obviously take advantage of a regular lender that says, okay, well, now it's a refinance and we're going to loan you money based on the true value of the property, not what you bought it for. Because that's something that always frustrated a lot of investors, where you were penalized with a lot of lenders. You went out and bought a house for 100,000 and it's worth 250 the day it sits. Well, we still need 20 to 30% down, the lower of the appraised value or the purchase price. So as I said, I see your financing as being just like a unique tool in the toolbox to be able to pull out, and not to say that people have to borrow low loan amounts to deal from you, but I think that's your little niche and just something that you probably do better than just about anybody else out there.
Yeah. So in the flip loan, so one of the neat things, there's really a bifurcation in the market right now. I'm not the cheapest guy out there at 13.9% and 3.9 points. There are guys out there that can, at the low end will lend you 9 and 1. Okay. But they're going to want 20% down. They're going to want 700 plus credit scores, full doc. Okay. And that's not for everybody. Okay. So so the people that are higher in my range, 13 and 3, 14 and 4, I'll do no money down if it's within 65% or 70% of the ARV. So about 70% of my loans are no money down. Now you still have to have cash available. You have to pay for the closing costs and the points, but no down payment. Now, so those are the flip loans. The rental loans. So I feel comfortable in Baltimore City. I specialize in Baltimore City. I do lead inspections for all the landlords. I love rental homes in Baltimore City. Okay. A lot of the big lenders are scared to death of them because of all the problems, break-ins and stealing money.
They're scared of lead paint liability. Hello, we got the freaking state expert right here that can definitely, and if you don't mind just switching gears for 1 second and just talking just a tiny bit about that. With regards to the lead thing, I mean, I assume you're typically recommending your rental property owners, I mean, if they're doing a rehab of the property, to get it certified lead free and do that one time rather than do the risk reduction.
Absolutely. I mean, all my sophisticated investors, and I'll define sophisticated investors as investors that have money to lose, like in a lawsuit, are all going lead free in any new properties or tenant turnovers that they have, because they just do not want the liability of having lead on the inside. A lot of them are okay with having lead on the outside, being limited lead free, but they for sure don't want lead on the inside. So, we're your partner in helping. I don't require that as part of my loans, but that would always be my recommendation, and the investor has to decide for themselves.
Well, and then the beautiful part about it is you're certainly not somebody's personal assistant or investor advisor, but it seems to me, I get the feeling that, like, if somebody calls you up on the phone, they're going to get a wealth of knowledge along with their financing, and you're going to be able to kind of like, once again, not saying you're holding somebody's hand throughout it, but you can look at a property and typically recommend to somebody. I mean, I'm sure you can probably look at a property and go, hey, this house is lead paint. I mean, obviously that's not scientific, but know which houses do or don't, just based on the look of the trim and look of the paint and, those type of things. And it just seems to me like that's something that you're getting from a local lender, a guy like you, that they're not handing the football off to somebody else. Like when they call the phone up, they're talking to you, not like an assistant or somebody else. And you're able to, I guess, look at the deal immediately over the phone to decide whether or not it's even worth looking further into it. And then you'll inspect the property physically yourself.
Yes. So I touch every piece of real estate I lend on, but it even goes deeper than that, Robert, because, yes, I'm the lender, but the reality is we're partners, right? I mean, I need you to succeed. You want me to succeed. We're in this together, and we just have obviously I get paid first and a small amount. You get all the profit or loss after that. So I'm one of the only guys that's going to tell you the truth. Your real estate agent might or might not, if he wants to get the commit. Because I'm with you I'm not just trying to get a commission, do a deal, get a fee, and move on. I'm tied up with you for the next 5 years. If
or a bad wholesaler. You know what I mean? Yep. You can gut renovate this property for 25 grand. I've got the people. Right. Just close on it, and then I'll give you their numbers.
Exactly. And and doing, I funded almost 1,000 loans over the last 14 years. So I just have I have a lot of experience with my other investors of like what a property on X block sold for, and what we were able to get and what would auction, so all that all comes with, me being your partner and giving you whatever advice. And some of my customers don't need that advice. They've got 50 of their own properties, right? But that's always available for me to offer to them.
Good. So your standard rehab loan is, and you call it a rehab loan, is that?
Yep.
Rehab loan is 13.9%, 3.9 points. Obviously, if you get a really great deal and you're a good candidate for financing, you might be able to get 100% financing, but you got to have cash. You got to be able to pay your own settlement costs at minimum, and possibly, you need some other cash as part of it.
Well, you definitely need working capital, right? Because you have to pay the settlement costs. You have to front the construction draws. So you create a draw schedule. Let's say it's a $40,000 draw schedule, 10 $10,000 draws. You gotta get the first 10,000, excuse me, the first $10,000 worth of work done. Then I come in behind you, see that it's done, and write you a check for 10 grand. So you have to front those costs. Then you have to handle any cost overruns. And as you know, Robert, there always is, right? In case it costs 45, 48, 49,000, where's that money coming from? And then you also have to make payments to me. So we have to make sure we can get you to the finish line, because the number one way that you lose money and I lose money is you run out of cash and the project stops.
Right. So your rehab loan, and forgive me if you've went over this, is that an amortized loan or is it just interest only?
Interest only.
Well, that's a good deal for a lot of investors, because it keeps your payments down that much lower. And when you're dealing in these lower loan amounts, sometimes, it's just a tool. It costs me this much to get financing on the property, but you have to look at it from the perspective of what that person is going to make if they're able to turn that property over.
Correct.
So very cool. So I don't think we talked a lot about the rental loan and how that works, which is something that I think totally sets you apart. Obviously dealing in some of these areas that not a lot of other people deal in sets you apart. Dealing in a lower loan amount sets you apart. But as far as the rental game in some of these certain zip codes, lower cost areas, there's nothing other than like cash or maybe putting something on your credit card. So tell me a little bit about Block M Investments and your rental loan. How does that work?
So we came up with this. I came up with this loan program because at one point back in 08, 09, 010, there was no refinancing available. So if I didn't create a loan product that my borrowers could get out of the loan product on their own, out of the loan, then I couldn't do the loan. Okay, so I came up with a 5-year fully amortized loan where you just make the interest and principal payments every month. At the end of 5 years, you'll have it completely paid off. No prepayment penalties. If you want to refi it, no problem. Sell it, no problem. Pay it down in chunks, no problem. Hit 16% and 6 points. So I know it sounds expensive, but remember, you're paying 6 points over a 5-year loan, which is not as, some people are paying me 3.9 points every year every time they do a rehab. Okay, so let's just take this as an example, Robert. A normal loan would be a $25,000 loan for a rental property in Baltimore City. Okay, the interest and principal payment would be $608 a month on that. Okay, you rent it out for $1,000 to $1,100. You're kind of breaking even or maybe slightly cash flowing positive, but it's not designed where you cash flow. It's designed where you break even for 5 years, then you own it free and clear. And you don't have to worry about refinancing me. You don't have to worry. You can, but you don't have to. You don't have to worry. You don't have to pay 2 sets of closing costs, for the purchase and then the refi. It's really good for investors who don't need the cash right this second, who maybe have full-time jobs and doing this for investment properties, or even rehabbers or investors that have other businesses but don't have their own 401ks. It kind of creates their own retirement investments for themselves. They don't have to pull the cash out right away. They can just pay me off over 5 years, then they own it free and clear. And Robert, if you did 3 of these a year and did this for 3 years, and you had 10 properties, by like year 7, you own 10 properties in Baltimore City, free and clear, that are cash flowing $1,100 a month with no mortgage. You're bringing in $11,000 a month.
Right.
You're set for life. You've got this like annuity for the rest of your life.
Well, and I don't want to delve too deep into the, finance aspects of it, but, people say, well, how does a lender make money loaning money at 4%? Because you're getting 4% every year and they're amortized, where you've got this huge stack of interest in the beginning. Believe me, the lenders would love it if people did nothing more than took a 30-year loan and paid the first 5 years and then paid you off.
Right.
They'd say, hey, great, because you have to look at what they're actually earning and during those 5 years rather than just on an annual basis or of course projected out over the 30 years. So your loan product obviously gives you the ability to, I guess, take a little bit of pain for a short time and get that property paid for so much quicker, because there's
Yep.
nothing that's more frustrating than paying 30 years is a long time paying. And I've got a couple 30-year loans, and you look at your statement and be like, okay, geez, another year, and it just gets paid off so slowly. So there's
Well,
definitely an advantage to just getting that thing paid for quickly and getting it to like a free and clear asset as soon as possible.
yeah, and here's the other problem it solves. How many people get into a hard money loan? They can't sell the property, which is not really an issue today because we're in such a hot market. But in the past, but that's not always the case. They can't sell it. They want to turn into a rental. They have struggled to refi. Maybe they're self-employed. They got a ding on their credit or something like that. And all of a sudden they're in default on their hard money loan. So my loan takes away all that concern because you'll never be in default as long as you make the payments, because it's self-amortizing. So you don't have this 12-month balloon that you're struggling to meet.
Well, and let's face it, with a lot of these lenders, what'll kill you about like a regular lender and a commercial loan, or even just just a standard conventional loan. I mean, you signing those loan docs, the last one that I did with a very reputable lender said that they could call the loan due, and they had all these things that said, hey, triggering events. And I mean, they were just literally, and the last triggering event was anything that makes the bank feel unsafe.
Right.
I mean, so literally, I mean, imagine going through the hassle and headache of getting like a loan with a lender, jumping through their hoops, and then literally having that stress in your mind that at any time they could just call that loan due, and I guess give you 3 months notice. And we know that lenders don't arbitrarily do that, but that's the reason why we get financing, because we're trying to use other people's money. And I mean, there's been stories of people in the past who have lost everything because you got into an economic cycle, banks called the loans due, they
Banks were
couldn't pay
calling,
them,
banks were
and they
calling
lost
loan,
the properties.
yeah, banks were calling loans due all day long in '09. I mean, in a normal time they don't, right? And normally, but they wanted to protect their balance sheet. Some of the banks went under, so they got bought out by other banks, and then that other bank called the loan due because they wanted the loan to be in default to get reimbursed from the government, because that was part of their purchase of the property of the other bank. You get caught up in that game, and
Well, I don't
it,
want to mention any names, but we bought a property that was owned by a bank in Elkton, Maryland, and we got a really good deal on it. And it was a property that the guy who owned it before had kept up on his payments and everything, and really wasn't in default. And the bank called the loan due, and he couldn't pay it off. So the
yep,
bank took it back, and I don't know all the reasons behind it, but some of it has to do with assets and liabilities and the balance sheet for the government and federal regulations and that kind of thing. And the poor little guy, got hurt in the process. I mean, literally, he probably could have gotten a hard money loan to be able to satisfy that arrangement for the short term until he
yep,
could get his, feet into the door of getting some more long-term financing at a little bit of a lower rate.
yep,
So I just think
exactly.
hard money is a tool. It's not for every situation. It just depends on what you have. And I guess going back to, I think the main benefit to dealing with a guy like you is the ability of, you're going to tell somebody whether or not like it's going to make sense or whether it's a good fit or not, because obviously you're not in the business of ripping people off. Their success is your success. I mean, if they don't make money or, the property sits vacant, I mean, let's face it, it's not a good situation for anybody.
Correct.
So that dovetails into the next question, which is, when you deal with some of these lower price range properties, and I myself as a real estate broker, we get a lot of goofballs. You know what I mean? People that, they're looking for their first deal, and there's nothing wrong with that. We were all there at one time. But people that maybe they took a course, they're really motivated. I mean, I've talked to people that are unemployed and like literally they have no money and they're out there wanting to invest in real estate, and it's a little dangerous. So I guess who's the ideal candidate for Block M Investments? I mean, you're not really looking at people's credit for the most part, but give us the profile of like who's the best candidate for your financing.
So, credit is so I underwrite loans as like an art, not a science. So there's not a formula, okay, which is good. It's good for you. So, and because I can then tailor something for you. So obviously I want everybody with 800 credit scores, but that's not realistic. Okay. And I will certainly lend money to somebody with a 500 credit score, but I'm probably going to lend less money. You'll probably
Right.
have to come with more cash to the table. Okay. And, but the one thing that is difficult to deal with is a lack of cash. You've got to get that working capital. And that working capital might be $50,000 on a $300,000 loan, might only be $10,000 on a $35,000 loan. Okay. So that is probably the number one thing that stymies a deal is that the investor doesn't have enough working capital. Now there's ways around that. You can borrow money, get some money from friends and family, get a partner, right? And
Credit cards.
credit cards are definitely an
Home
option. Lines
Depot
of credit.
card. I mean, if you have decent credit, you should be able to get a credit card with a certain, which it just allows you to kind of like put the money on there, put the contractors on there, put the materials on there till they get a draw from you.
Exactly. So that we all factor that in. But the person I can't help is the person who calls me up and says, "It sounds like a great deal," and I say, "How much cash do you have?" $3,000.
Right.
Well, it can take you 12,000 to close on this $100,000 property. So you do need, even though I can do no money down deals, you have to have working capital. But the neat thing is you can go out and solve that problem too with partners, friends, family members,
Right.
things like that.
Right. Yeah, totally. So yeah, lack of cash. I mean, even if you borrow 100% on the loan, and let's just say that you're even able to somehow get funding for your settlement costs, you still got to get that project started.
Yep.
And BGE is going to want to get paid. And just all the little
Insurance.
stupid stuff
Yep.
that it takes to get started. And contractors, I mean, I've had a devil of a time with contractors. I mean, not every contractor is going to do something and wait until they get the job done and then wait a few more days to get the draw from the lender. But that's actually another thing, and I don't want to go too deep into it, is you're a lot quicker when your draws than your quick draw. You know what I mean? When it comes to, getting people paid. And that's important because,
Yeah.
look, I mean, let's be honest. If you're going to a hard money lender for financing, you probably don't have hundreds of thousands of dollars in the bank and unlimited resources. So you're juggling money and using it as a catalyst to make a profit. But you need your money back when you put it out there. You need it back as soon as possible. So one of the things we talked about is the fact that you get out there quickly and look at the properties and obviously get that money in their hands electronically right away.
Yep. Which is also a big deal because if I write people a check, sometimes the bank holds it for 6 days. A $20,000 check.
Or the mail. I mean,
Right.
obviously there's people that are getting mail that was mailed like 6 weeks ago, and they
Right.
get it on the same day. We've had a devil of a time with regard to the brokerage, and like we get a check in the mail and it's like, oh great, received the commission check and it's like dated 45 days ago, and then we deposit it, and then a day later the next check the replacement check comes that was dated a week ago, and the first check bounces.
Right.
And everybody's all upset because we want to charge them a bounce check fee. But anyway,
Yeah. So I've definitely moved to almost all electronic crediting for the draws. So I go out during, like today, check everything, and then I process it today, later this afternoon or this evening, and it hits your account the next day.
Gotcha. Well, look, I mean, all this is incredibly helpful. I just want to go back to the point that hard money, period, your hard money is a tool. It's one tool in that tool belt, a screwdriver, a wrench, whatever it is. It's not suitable for every situation. It depends. So your niche is the lower price range properties, dealing in probably some areas of Baltimore City that other lenders probably, just would say. And here's the other thing too. I assume there's a lot of larger hard money lenders that probably, we all know the term redlining, and in the commercial world, my assumption is that's probably legal. I'm not going to, say whether it is or not, but it probably is. And they're not going to tell you, we're not going to loan in the zip code. They're just going to waste your time jumping through the hoops and then eventually say, oh, the property didn't meet the criteria, the loan amount didn't meet the criteria, not the fact that they were scared to loan in an area that, was a little sketchy or needed some revitalization. So
Yep.
I just think your financing is an incredible tool. And when you couple that with the fact that you get like a local knowledgeable player that's not going to run you down the rabbit hole of jumping through hoops, let's see your tax returns, let's see your this, let's see your that, let's see your profit and loss statements, and then only to find out later on, oh, I'm sorry, we don't have a product that meets your needs.
Right.
They're going to get that from you right up front at zero cost. And then I don't think we touched on it, but quickly, your fee to evaluate a property is very reasonable, and tell us how that works.
Well, I'll evaluate the property over the phone for no charge, just talk you through it. I'm 95% effective at doing that. If you then want to move forward, I meet you at the property, that starts the process. I do charge $295 as like an application appraisal fee. And when that happens, I put the money aside for you. So I'm not a bank with unlimited funds. So if I'm committing 100 grand to you, I put that, once you pay the 295, I put aside that 100 grand so I don't lend it to somebody else. And then I issue a commitment letter usually that evening, and I'm ready. I'm ready to go as soon as the title work's done. There's a $95 draw fee for any draws I have to do. And if you use my title company, there's no additional fee. My title company is King Title. If you use your title company, that's fine. My title company then will charge you $600 to review the title work and issue the loan docs. And that's it for my fees.
Well, and a lot of lenders get you on the junk fees.
The junk
We got
fees.
500 from this and 1,000 for that. And you look at the whole package, and the relative, especially on a lower loan, the interest rate that they give you looks real great. And then when you actually add 500 and 1,000 here and there, you end up, they could actually be higher than you. I could see a scenario where somebody gets a $25,000 loan with a lender, they get offered an 8 or 9% rate, but when you take in the flat junk fees that aren't based on the loan amount, you end up being comparatively higher rate than what you would charge.
Right. And even like a lot of people just look at the points, I charge 3.9 points. A lot of people say that's expensive. It is. I said, but there's no junk fees. Somebody else might charge 2 points and charge $1,000 junk fee. Well, there's another point. Like so, I've just tried to do the right thing, tell all my fees up front, be straight about it, make sure people can analyze it, and provide the service to be out, the next day on almost every single thing I do, whether it be draws or appraisals or whatever. That's how I kind of set myself apart from the other lenders.
Well, there you have it. Neil Roseman, Block M Investments. If you want to reach out to Neil, you can go through his website. It's blockminvestments.com, and M as in Mary, blockminvestments.com. And as we've said here, if you have a deal, give him a call. Go through the website. He'll evaluate it over the phone for nothing, let you know whether you're barking up the wrong tree or not. And he does act as a backup sometimes. People apply with a traditional lender or another hard money lender, and maybe they're not sure of it. Maybe it's an out-of-state person. They contact him. He's a backup. And all it's going to cost you is $295 if he physically evaluates the property. And he's typically going to loan on just about every property. If you're a good candidate, it's just a question of how much. So Neil, thanks so much for your time today. This information is needed. You've got a very unique niche there, and we think a lot of investors need that. So thanks again for your time today, and
thanks for the opportunity, Robert. Thanks for the opportunity.